Good evening traders, Russell Sandiford here again for your weekly market outlook for easyMarkets. Now Friday certainly gave everybody a really big shot across the bow for the political pressure on the US dollar out of nowhere there, with Team Trump having the wobbles as Flynn has agreed to plead guilty in terms of lying to the FBI. Again, this Russian probe from the 2016 US election pops its head up still and bites hard on the US dollar sentiment. Even the Aussie and the Kiwi against the greenback spiked straight up in a very, very sharp US dollar sell-off across the board. So what we did see, of course, I'm sure it's all ancient history for most of you traders now, but what we did see, of course, is gold took off, spiked straight up to 1290. I'm very interested to see that it did stop at that 1290 level. I would have assumed something along those lines that we did see hit the headlines and the newswires on Friday. I would have thought perhaps 1300 or 1300 plus was possible, but not the case. Now that got shrugged off pretty swiftly in the market, of course, because over the weekend the vote of 51 to 49 for that US tax reform plan was all about the US dollar doing a complete reversal and a U-turn and being bid very hard. So what we saw, of course, on Monday here in Asia to open the market was the US dollar bounce back fiercely. So dollar yen after that spike down came all the way back to 1280. For mine, dollar yen long should be a nice, clean and obvious way to play out this US tax reform story, which is a very big milestone for Team Trump. Really his only win on the board, and I'm sure Donald Trump is extremely unhappy with the timing of the other negative there on Friday. But look, what have we got to deal with this week? Again, for mine, I think the US tax reform story, the dollar positive scenario, which will drag gold back, and it will obviously make pairs like dollar yen bid higher and the Aussie come back to earth. I think that story will win the battle in these two stories, because there are two headlines and we need to decipher which one's more important. The political jitters or that tax reform, which is a really big move in that corporate tax rate back to 20%. So look, on the ground tomorrow, a lot of data here in the Asian dealing session, kicking off with the RBNZ Spencer, specifically speaking at 11:15 Sydney, in relation to inflation and how low inflation impacts the Kiwi. For mine, that could be a very interesting one to be positioned for tomorrow, and that is actually a short Kiwi dollar. I think there is a lot of pressure there even after that blip on Friday, and the sellers might race back in to the short Kiwi dollar trade again tomorrow. Now, of course, don't forget tomorrow as well, you've got two other big headline events, one of which the China data just about lunchtime, and the RBA, of course, very much expected to sit on their hands at 2:30 in the afternoon here in Sydney. Now, looking ahead, one of the other huge movers last week was the dollar CAD. It had built up beautifully to 129 and was looking like taking another run at 130. On Friday on the easymarkets.com.au website, I made a point of saying be careful, because when it moves, it moves. Now the Canadian GDP, the Canadian employment and the unemployment data were all very solid. But the other reason why dollar CAD did a massive reset back to a low around 126.85, of course, because gold was also rallying. Oil hit 58.90. I've been saying $60 and I'm not quite there yet on oil. But all of those things, the unemployment rate, for example, for Canada, blipped down to 5.9. It was expected at 6.2. So the bottom line there, a lot of support in the CAD, and the dollar just fell out of bed. Now, remember, Bank of Canada are out Wednesday night / Thursday. That's 2 a.m. for Sydney siders, just about midnight for you guys in Singapore. So this can all reverse depending on the Bank of Canada's rhetoric, tone, sentiment, etc. towards their outlook and forward guidance into 2018. Remember as well, we've got non-farm payrolls, which was shifted to this Friday. Now, looking at a lot of bank reports this morning, we're estimating the potential there for the US unemployment rate to pull back to 4%, which would be a nice, supportive excuse for the dollar bulls to get into the dollar yen long or sell some more euro dollar. I think those two trades are the cleanest way to play this week. Again, the euro to come back off those recent levels where it did make a move for 1940 on Friday. I think we won't see that 19 handle again for a little while. So guys, I love that euro dollar short and the dollar yen long once it busts through 13 to carry on higher. For the Bitcoin traders, of course, there's always plenty of action. Now, the big story is the announcement. The firm date is the 18th of December for CME futures. Now, two things this does for Bitcoin. One, the futures products themselves legitimize Bitcoin a lot, but more importantly, more simply, it allows and opens that door for the institutional money to flow into Bitcoin with standardized contracts through the CME. And the NASDAQ, of course, will offer futures products in the early part of next year. So bottom line, what does that mean? For all the people scratching their head and thinking, will Bitcoin pull down from here and have a profit-taking a little exercise jolt lower? I don't think that's the case. I think it will be very swiftly bid through 13,000, very swiftly on the back of this date being set for Bitcoin futures. As always, though, if you guys want to understand more about gold, oil, all of the other commodities, stock indices, FX, or Bitcoin, just come through to the Easy Markets dealing desk.